Hello everyone. Welcome to the Stock Minds web channel. Cormedix, Nasdaq CRMD, has emerged as a standout performer in the biotech sector, showcasing remarkable financial growth and promising future prospects. The company's recent Q1 2025 earnings report highlights significant milestones, including a substantial increase in revenue and a transition to profitability. In this video, we will dive into Cormedix's recent earnings, stock performance, valuation, growth prospects, and the risks to consider. About Cormedix. Founded in 2006 and headquartered in Berkeley Heights, New Jersey, Cormedix is a commercial-stage biopharmaceutical company dedicated to developing and commercializing therapeutic products for the prevention and treatment of life-threatening conditions and diseases. The company's flagship product, DefenCath, is an antimicrobial catheter lock solution designed to reduce catheter-related bloodstream infections in patients undergoing hemodialysis. DefenCath received FDA approval in November 2023 and was commercially launched in inpatient settings in April 2024 and in outpatient settings in July 2024. Cormedix financial performance. Cormedix financial performance in Q1 2025 marks a dramatic turnaround from the previous year, underscoring the company's successful transition into a commercial-stage enterprise. The company reported net revenue of $39.08 million for the quarter, a substantial increase from zero revenue in Q1 2024, driven primarily by strong sales of its flagship product, DefenCath. Earnings per share (EPS) came in at 30 cents, a notable improvement from a loss of 25 cents per share in the same quarter last year. On a trailing 12-month TTM basis, revenue climbed to $82.55 million, and EPS improved significantly to 28 cents, compared to a loss of 93 cents a year ago. Free cash flow per share, while still negative at minus 22 cents, showed a 73.81% improvement from the previous year's minus 84 cents. Cormedix also demonstrated strong profitability with a gross profit margin of 95.19% and a net profit margin of 20.81%, highlighting impressive operational efficiency. Furthermore, the company posted a return on assets (ROA) of 8.31% and a return on equity (ROE) of 19.87%, reflecting effective use of its resources. Importantly, Cormedix operates with no debt, providing ample financial flexibility to support future growth initiatives. Over the past 5 years, Cormedix had no revenue until 2023. Commercialization of DefenCath began in 2024 and has provided substantial revenue growth since then. Net income turned positive this year, and negative free cash flow has been reduced as the company's product commercialization ramps up. Cormedix 2025 financial forecast. Looking ahead, analysts are optimistic, forecasting 2025 revenue to reach $144.23 million, a 231.77% increase from 2024's $43.47 million, and EPS to rise to 80 cents, a sharp rebound from a loss of 30 cents in 2024. The average analyst gives strong buy rating with price target of $17.67, giving potential upside of 51.93%. CRMD stock price performance and valuation. At the time this video is created, the stock is trading at $11.63, representing a 119.4% increase over the past 12 months, substantially outperforming the S&P 500's gain of 12.6% during the same period. Over the longer term, the stock has delivered a 194.4% return over 5 years, also outpacing the S&P 500's 105% rise. In terms of valuation, Cormedix currently holds a trailing 12-month TTM price-to-sales (PS) ratio of 8.74 and a forward PS ratio of 5.58. Its trailing PE ratio stands at 42.72, but its forward PE ratio drops significantly to 14.86. A fast-growing biotech trading at a forward PS of 5.58 and a forward PE of 15, Cormedix valuation is extremely low and undervalued relative to its potential. Cormedix growth potential. Cormedix is well positioned for sustained growth, driven by several key factors. 1. Strong performance of DefenCath. DefenCath has rapidly gained market share in outpatient dialysis centers through strategic partnerships with major U.S. renal care providers, including a key 2024 agreement supplying over 200 clinics, expanding access to patients receiving hemodialysis via central venous catheters. Clinically, DefenCath combines taurolidine and heparin to reduce catheter-related bloodstream infections by about 71%, significantly lowering costly hospitalizations that average $45,000 per infection. Cormedix benefits from favorable Medicare reimbursement policies, including CMS pass-through status and recent payment adjustments, which remove financial barriers and encourage wider adoption in outpatient and inpatient settings. This strong commercial execution has driven Cormedix to raise its H1 2025 sales guidance to between $62 to $70 million, with ongoing efforts to penetrate smaller clinics and inpatient hospitals where DefenCath use is still emerging. 2. Expansion into TPN market. Cormedix initiated a pivotal Phase 3 clinical trial for DefenCath in adult total parenteral nutrition (TPN) patients in late April 2025, aiming to address a critical unmet medical need by preventing catheter-related bloodstream infections (CLABSI) in this high-risk population. The TPN market represents a substantial opportunity, with an estimated addressable size of $500 to $750 million and potential peak annual sales of $150 to $200 million for DefenCath, which would diversify Cormedix's revenue beyond its hemodialysis segment currently facing reimbursement pressures. Success in this trial would position DefenCath as a key solution for reducing CLABSI rates, estimated at over 25% in TPN patients, thereby improving patient outcomes and reducing hospital admissions and mortality. Overall, this expansion into TPN marks a strategic growth initiative that leverages a large, growing market and enhances Cormedix's long-term commercial prospects by broadening DefenCath's applications and revenue streams. 3. R&D expenditures and clinical investments. Cormedix significantly increased its research and development (R&D) expenditures in Q1 2025 to $3.2 million, a 281% rise compared to $0.8 million in the same period of 2024. This surge is primarily driven by expanded personnel and clinical trial services to support the initiation of the Phase 3 study of DefenCath in patients receiving total parenteral nutrition (TPN), which started patient enrollment in late April 2025. Although this increase in R&D spending elevates short-term operating expenses, it represents a strategic investment critical for diversifying Cormedix's revenue beyond its current hemodialysis indication, targeting a new $500 to $750 million market opportunity with potential peak annual sales of $150 to $200 million. Management expects R&D costs to stabilize in 2026 after the completion of the TPN trial, aligning with the company's broader goal of sustainable long-term growth fueled by an expanding clinical pipeline. Risks to consider. While Cormedix presents a compelling investment opportunity, potential investors should consider the following risks. 1. Dependency on one product. Cormedix profitability and revenue growth are heavily reliant on the commercial success of DefenCath, its flagship antimicrobial catheter lock solution, which generated $39.1 million in net revenue in Q1 2025 and drove the company to profitability after prior losses. The company's financial health depends on continued adoption by outpatient dialysis centers and expanding penetration into inpatient hospital settings, where DefenCath shipments have recently doubled due to a fully operational dedicated sales team. Any disruption in product adoption, such as slower uptake by healthcare providers or changes in purchasing patterns, could materially impact sales and earnings. Additionally, regulatory challenges, competitive pressures, or reimbursement changes could affect DefenCath's market position, as the company currently derives nearly all its revenue from this single product. 2. Clinical and regulation risk. Cormedix is conducting a Phase 3 clinical trial to evaluate DefenCath's safety and efficacy in reducing central line-associated bloodstream infections, CLABSI, in adult patients receiving total parenteral nutrition (TPN) via central venous catheters. The company began identifying investigator sites in March 2025 and expects to start patient enrollment in the second quarter of 2025, following FDA feedback and submission of an amended clinical protocol. While the FDA has provided supportive feedback for this label expansion, the timing of trial completion, regulatory review, and ultimate approval remain uncertain and could influence the speed and extent of market expansion. Any delays or unfavorable clinical outcomes could significantly affect Cormedix's ability to capture the estimated $500 to $750 million market opportunity in TPN patients, thereby impacting future revenue potential. 3. Market and competitive risk. Cormedix operates in a highly competitive medical device and biopharmaceutical market, where shifts in healthcare policies, reimbursement rates, and technological innovations can significantly influence its market share and pricing power. The company must continuously navigate evolving regulatory environments and secure favorable reimbursement from payers to maintain and grow DefenCath's adoption across outpatient and inpatient settings. Established competitors with greater resources and broader product portfolios pose ongoing challenges, requiring Cormedix to demonstrate DefenCath's superior clinical benefits and cost-effectiveness. Additionally, scaling production and distribution while educating healthcare providers about DefenCath's advantages in new markets, such as total parenteral nutrition and pediatric hemodialysis, are critical to sustaining growth amid these market dynamics. Conclusion. Cormedix has demonstrated remarkable growth and operational efficiency in Q1 2025, transitioning from a development stage company to a profitable commercial entity. With a strong product in DefenCath, promising pipeline opportunities, and a robust financial position, the company is well equipped to capitalize on market opportunities. Given the favorable analyst outlook and reasonable valuation metrics, Cormedix presents a compelling investment opportunity for those seeking exposure to the healthcare sector. But remember, this is not a financial advice. What do you think about Cormedix? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching and see you in the next one.